Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we talk about the market trade action we saw on Tuesday and think about some of the fundamentals that we're seeing in this market as we roll towards Christmas time. Bill Biedermann, agmarket.net, is with us. Bill, great to have you back on the show, sir. Hope you're doing well.
Yeah, doing great. Thanks for the invitation.
Well, Bill, let's jump right in and talk first about the soy complex. That meal market on Tuesday, screaming higher and pulled beans with it. I know the bean oil market is another story. We can discuss that as well, as we saw some continued pressure there. But man, oh man, meal and beans, I think that's the place to start. What's your initial reaction to the upward move we saw on Tuesday's trade, Bill?
Two things. Number one, end users, it's got cheap enough to where they can make this thing work. And of course they are making it work. And with the way cattle are trading, I mean, there's profit to be made. So you saw kind of an end to the potential further downslide. And they said, we better get ourselves booked, number one. Number two, probably more importantly, was the change in attitude towards biodiesel. Since the EPA did not rule in favor of a massive, quick start to that industry, that threw a lot of these funds who had been positioning themselves long bean oil, short meal, into a negative position, and they just jumped. They jumped hard and they jumped fast, and they don't care who's in their way. That's what happened, and I think the other idea that the potential of seeing some dry weather or not the rain that we were expecting to develop in Argentina, disappointing rains will stay in the northern half and then dry for another week after that. We saw some people come in. Of course, Argentina, the main thing they do ship is product, not soybeans.
Mm-hmm. Well, and thinking about those moves, and you brought up the EPA announcement, that seemed to be the straw that broke the camel's back. You alluded to a lot of folks that just jumped out of that market. They were long. They wanted to get out. Now we're seeing that spread between meal and oil widen back out a little bit here. And I think about South America, Bill. Obviously, we're going to be watching that very closely here, their weather the next couple of weeks and months ahead, the China-Brazil relationship and what we get out of Argentina. But this soy complex, to me, I guess I like it more than I do the moves in corn and wheat right now. It feels like we're doing our best to hold above 14 in beans on the board. I just wonder, what the next couple of weeks and months will hold as we watch China demand, et cetera, Bill.
Yeah, surprisingly, everybody's turned pretty bearish on agricultural commodities, and a lot of it because, there's no demand. Exports are way overestimated. We're going to have, I've heard carryover numbers of 2 billion and 4 billion for new crop, and I've heard of 400s in the soybeans. It's amazing how the attitude has turned bearish, and they're all talking about bad demand. And yet, we see announcements again today. We saw announcements just to China and unknown in beans. They're quietly buying, and that's holding market on dip. So $14 seems to attract it. Yes, we're still higher than Brazil, at least for the next few months. But then from March on and February on, we're not the highest price. So there's demand there for us, and it's enough to keep us. But obviously, Jesse, China is just as smart as we are, and everybody's got their eyes on South American weather. Right now, we're in a situation where any decline or potential revision downward in Argentina, we're seeing enough revision upward in Brazil to make up for it. So that puts a lot of pressure on the Brazilian number to perform. And if we see, we got a long time here yet for the season. If we go into a 2 or 3 or 4 week flash drought and Brazil starts to shave their number, that's a game changer instantly. So it's going to be hard to go below $14. I think, $13.50 is probably the lowest price we've seen in months. That would probably hold any kind of a sell-off. Could we take out 15? Well, yeah, we could easily take out 15 if we have a weather problem.
Well, thinking as well ahead to Friday, December WASDE report, we typically don't see any moves at all. It's kind of the kick the can down the road. Do you think with the weather issues in Argentina, though, I know the Rosario Exchange has dropped their estimate. Do you think USDA makes any move on the Argentina crop in the December report, Bill?
I don't think so. Personal opinion is, it's Christmas time. They don't care. They don't have a history of making many revisions. And if they do revise it down by maybe 1 million ton or 1.5 million, they'll increase Brazil by 500,000, and it's not going to be a significant number change. So I don't think that, regardless of how they move the needle, I don't think they move it enough to change the direction of the ship.
Let's talk the corn market. Corn market's been beat up here the last few sessions. I know March corn went down and filled a gap on Monday, and now we're maybe trying to find some support. But this corn market, I'm not in love with the action we're seeing, but I wonder if maybe a rally into the January report could be seen. I know that's happened many times before. When you look at this corn market, look at the charts, and look at the fundamentals here, though, Bill, what are you seeing, and what can we make of this heading to Christmas?
Yeah, we still have one of the tightest situations in history, right? I mean, there's only been like 1 or 2 other times. So, we've got a very bullish underlying fundamental thing, or like a concrete foundation underneath this building that's holding it up. And I don't see that changing in the short term. I think the short term negativeness of our markets, in corn, it's the wheat that's the anchor killing us. And some of this has to do with people thinking that the war is going to get over and Russia's going to ship all this wheat. Oh, by the way, a lot of the wheat Russia's been shipping has been Ukrainian wheat that they stole. It's surprising to me that the allies haven't, backed away and said, well, we're not going to do that anymore. But there's a lot of politics and a lot of discussion that we could get into. Reality is these markets have good support underneath them from a fundamental value standpoint. $6 corn is going to hold, until we know what the production cycle is going to look like and that's, South American production cycle, and then a U.S. acreage number that would get us a good crop. So that's really your downside potential. $7 is still the upside potential, and we're going to be stuck in that kind of a range. I honestly don't think we're going to go much lower than we're already at, but $6 is the chart low. And so you could be in that range until we really have a good idea of production. I just think we're going to trade sideways. Look at the demand side domestically, though. I mean, these livestock margins are good, and I suspect that people are going to continue to buy feed to keep those animals alive, because those animals are making the money. And then on the export side, hands down, we're losing out to Brazil. Brazil is taking over the Chinese first 3 to 4 million metric tons. They've got about 1 million tons shipped. So there's going to be a little bit more lag yet. But that's really typical for this time of year also, for our exports to be lagging in corn. It's not even January yet. And from January, February on, that's when our exports pick up. So I just think it's too early for the market to be friendly.
When you mentioned corn, domestic demand is really strong. What basis is some of the highest levels in 2 decades, I think, still here as we head towards December. So that speaks to some of that domestic demand, especially the Western Corn Belt, I think, is where we're still seeing some strength, Bill.
Yeah, and that's a great trade right there that you bring up. Why doesn't a farmer who has grain that he'd like to move or get some cash flow out of or something, you could do a basis contract. You could just sell it and turn around and buy the board. You're selling what's high and you're buying what's low. To me, I think that's what I was taught to do.
I couldn't agree more. And with everything too, with corn, beans, the main 2 crops here, Bill. I mean, as we head to the end of the year, it's a lot of that sharpened pencil position squaring for guys and gals. They're looking to see if they need to make some of those sales. But I mean, with these good levels, it's one of those things that you have to, you really have to think about it here before the calendar flips over, Bill.
Yeah, you really do, I believe. And, the opportunity is there. The market is set up for it. The downside is probably limited on the futures. I mean, there's always going to be 20, 30 cents risk, but there's, is there more than 20 cents or 30 cents potential on the upside? Yeah, I mean, if this weather continues to be a problem, then yes, for sure. But I think the main thing to think about is if you're doing that and selling cash, buying the board, don't expect the board to go up right away. I mean, right now, between now and the end of the year, can't think why any investor would want to do anything to screw up their year-end taxes, just like a farmer doesn't want to do anything in the cash if he's figured it out already. So, between now and year-end, don't expect a lot.
Bill Biedermann, agmarket.net, is our guest here today on the show. Bill, the wheat market, it feels like it's in trouble. I know the dollar is down a little bit on Tuesday, but still, you mentioned wheat being an anchor for corn earlier. And on top of that as well, I know your colleague Jim McCormick tweeted a story from Wall Street Journal today about a Russian oligarch seizing some 400,000 acres of Ukraine farmland. I mean, I think about the Black Sea issues and more and everything in wheat. I'm surprised that wheat continues to go lower, but I know this is an interesting market to watch right now, Bill.
It's been fascinating that the entire time that the Ukrainian war went on, the trading funds remained in a short position of wheat. Now they got it down to about even or maybe a negative 10 or 20,000 contracts. But I'm just going to look on my sheet today. Today they're short 70,000 contracts of wheat. How could they do that when clearly the war was removing at least 10 million metric tons of supply? And that has not changed. I mean, they lost a lot more than that, and they've been able to kick out about 10. So it's, to me, an amazing story to see how this wheat's getting crippled. And at the same time, I look at, well, what is the most negative thing on my desk that I can pick up and read? And it's fiscal policy. Fiscal policy manipulates and drives the markets the way it's intended to do. And that intended fiscal policy right now is to deflate, especially food and especially fuel. And look at the two commodities that you could argue friendly, when we look at the Argentine wheat crop, when we look at the Australian quality of their wheat crop, when we look at, the Ukrainian situation, you would think the market would, but these markets continue to deflate. Same with the energy markets. And this is what's a concern for me when I look at all things like corn, like soybeans, like cattle, everything. When I see wheat taking out the contract lows that we put in August, that is a concern. And we did that 2 days ago.
Well, and with wheat as well, and you brought up energies, watching this crude oil market, I know there's been some chatter about Russia getting a little bit of a relaxed price cap and getting some of their oil moved out to, say, China. I mean, we look at energies as well combined with wheat, and I'm with you. I've watched these two markets pretty closely, and maybe it's a precursor of what could be to come. I know it's hard to say, it's all conjecture, Bill, but you brought up a lot of good points there with what you're seeing with wheat and energies right now.
Well, Jesse, it's so crazy that you read comments, and commentary is often just kind of like pretend made up information in order to justify how the market has moved. I mean, I was listening to a blog last night, and the guy's saying the Ukrainian war is going to be done. They're going to come to a settlement within a couple of weeks, and the whole eastern half of Ukraine is going to be given to Russia, and west of the river, it's going to stay Ukrainian. And I'm going, I don't know where this guy is getting this information, but if that's what's feeding some of the New York traders, I can see why they're selling.
That's a very good point as well. Very good point. You brought up fiscal policy, a little more on that. I know that Wall Street, we're kind of waiting on the Fed meeting to see what they do for the economy, slow the economy next week. Let's talk about 50 basis point rate hike. I mean, that's a 50 basis point rate hike, Bill. And just watching what's going on with this dollar and this fiscal policy, it doesn't feel like the inflation play is going to be gone anytime soon, Bill.
Jesse, I agree. I think that the fiscal policy that we're on is intended to slow the economy. It's intended to cause a little bit of unemployment to develop. It's intended to cause demand to drop and prices to follow. And so, the other day, Powell got on and the market rallied 1,000 points. That was about 5 days ago. And today we're selling off on the Fed supposedly going to be speaking. I don't know what they're going to say other than the 5 half point print. But the point being is this: take away all that day-to-day garbage and look at the general policy. The general policy is to deflate. The general policy is to cause markets to come down a little bit. The general policy is to raise interest rates. I tried to buy a farm the other day. It's 8%. 8% interest. You can't make it work, right? And just think about that on the corporate life. You've just got an 8% increase in your financial costs. On the other hand, I'm paying my mom, who's 97, she could buy a CD today and get 3 or 4%, which isn't a bad return compared to what we've seen. So that money's coming out of the stock account where there's risk, and it's going into there. So there's a lot of things to me that make me feel like the picture right now is more downside exposure than upside exposure. And I'm talking about the equity markets, but that creates an influence on how we trade commodities.
Maybe one silver lining, if we want to call it that. I know diesel prices have been coming down somewhat. That could be a relief for farmers here through the winter if they can get some diesel needs booked. But I think that's maybe a small silver lining. I don't know. Maybe I'm reaching for straws there, Bill.
Well, I think that all of that will happen. And the issue though is going to be, how do you manage the 2023 revenue curve to make sure that the inputs that you've already bought have protection against it? And, we've been recommending for a couple months to be 50% sold on 2023 with an option strategy. And I was looking down my book. I don't handle the number of customers that I used to, but I think I only have one customer who's 50% sold. So, farmers have just been super reluctant to get involved, even if it's a position where there's upside potential built into it. They've still been reluctant. And that's what scares me going into 2023, because there's every reason to be mildly to wildly bullish if there's a weather problem between now and spring. But if we have the record South American crop followed by a record U.S. crop, obviously we'll be at $5. So I'm looking at that and I'm going, why wouldn't we all want to have a floor under this thing and know that the inputs that we bought at $1,000 are covered, and my upside's still open? But it just didn't. The song didn't sell. That's the bottom line. And so it concerns me for the whole farm community, where they sit and what their structure or what their strategy is. We're going to have a seminar in February, which I'm hoping that you show up for. And
yeah,
it's going to be really interesting to hear all the outlooks, like David Hightower on the macros and the logistics and the cash guys and all that stuff, and see how the farmers in the audience react to the strategies that'll be laid out.
Is that reluctancy? I'm curious your take on this. Is that reluctancy? Is it complacency? Is it an unwillingness to do something different for what we've done for years and years with our marketing? What do you think it is with that attitude right now, Bill?
Okay, so I like to do a lot of projects outside of just trading, right? Mm-hmm. So, I just finished a house project or something like that. And when I get done, and I'm saying this because I think this is what's going on in the farmers' brains, is that when they get done with a big project like harvest, they're just like, good, I'm going to give my brain a rest. And then I got to do my financials and make sure I'm where I need to be for the end of the year. And the last thing on my mind is protecting my inputs for 23 with enough sales to cover those costs. And I just think it's exhaustion. I personally think that. And they've had a good year. So financially, there's no real pressure on them to act. So you take that lack of pressure and the need for relaxation, a little bit of mental relaxation. And I think that's what caught them. I just hope they don't get caught off guard. If we don't have a rally between now and March, we could be turning on to a gravel road.
Bill, we shortchanged the livestock complex real quick. Any thoughts there? I know it wasn't a complete washout day Tuesday, but it definitely wasn't a good day in cattle and hogs, Bill.
Well, it's because the box beef broke so hard. So that just kind of sent a shockwave. I mean, it went down $7, so that was huge. But look, cash cattle are at $156. I think 158 or 9 traded today in South Dakota. So reality is cattle are good. The trend is up. I like to eat beef, and I'll buy it to support it. My wife still thinks it's going to $200, so she's always right. But but we're due for a break. We had a big rally, and box beef is showing a little signs that holiday demand has been met.
Bill, you mentioned your winter conference coming up in Nashville that I know I'm looking forward to attend, and I know folks can learn more about that, sign up, and as well as get in touch with you and the team there at agmarket.net very easily on your website. Agmarket.net is probably a great place to start, isn't it, Bill?
Yeah, right at the top, you'll see the ad or the banner. Just click on that.
And I know as well you can find phone numbers for them, 844-4AG-MARKET, though, is a good way to get in touch with them on the phone as well. Bill Biedermann, always a pleasure, sir. Thanks for the conversation today, and we'll talk to you again soon.
Thanks, Jesse.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.